have a great pleasure of bringing to this call Anne-Marie Birkill. This is a great opportunity to hear from a star in technology commercialization. Birkill has worked with hundreds of early-stage technology companies as senior executive advisor and business coach. Currently, she is a partner of OneVentures, a venture capital firm that invests in technology companies that serve or disrupt large, high-growth global markets. It is not a small fund. The firm has $150 million under management and recently launched its new Innovation and Growth Fund 2. That fund is focused on growth and expansion stage technology companies. She's a director for portfolio companies Paloma Mobile, TheBestDay, Charm Health, and Peak3. Her previous roles included CEO of i.lab Incubator, various senior management appointments at UniQuest, and director of public energy storage company RedFlow Limited. She also has 15 years in leadership roles in agri-business companies developing and commercializing new cultivars of a lot of plant types, ornamental, aquatic, food, and forestry. An active member of the innovation community, she is an industry fellow with the UQ, the University of Queensland Business School, a director for Creative Enterprise Australia and Springboard Australia, a leading program for women entrepreneurs. Welcome, Anne-Marie.
Thanks very much, Alicia. You make me feel like I must be about 100.
Yeah, you know that I was going to ask about surgery, but you know, that happens when you work a lot. You get a lot of things done.
You do.
Yeah. So it is a pleasure to have you here. I want to start with asking Anne-Marie, how did you get involved in venture capital?
The end of the story is a serendipitous meeting with the woman that's now become my partner, Michelle Deeker. And I think you'll find that if I just skip through my career, it's been characterised by taking a lot of opportunities that have crossed my path. But really, ever since I finished my science degree at university, my career has been characterised by being involved in the commercialisation of new technologies. So in the early days, it was in the commercial environment, taking new cultivars of different plant varieties to market. I then moved into a university environment where I broadened that technology commercialisation expertise beyond plants to all sorts of amazing things. I worked on magnetic resonance imaging, diamond exploration. I still did some plant work, but a whole range of different technologies. And then I had a small boutique commercialisation company with a single partner, and then became i.lab, CEO of i.lab Incubator, where of course I work with a whole range of other technology companies. So it's sort of a natural progression from doing to advising to supporting to investing. I think if you sort of put the career together, becoming a venture capitalist was really a natural progression in that process.
Did you ever think that you were going to be a venture capitalist?
No, it's actually really interesting because when I was CEO of i.lab, I was lucky enough to have a really fabulous person on my board of directors who became a great mentor to me. And after being in that role for about 5 years and doing all sorts of exciting things, he and I had a conversation that kind of went, well, what do you think you might like to do next? And because he had made a long career in venture capital, it was him who suggested that this might be a sort of a natural path for me. And as I say, serendipity meant that he knew of a woman who was setting up a new fund that was looking for partners with my sort of background. So if those two things hadn't come together, I'm not sure I would have ended up in this role. But I'm very glad I have. It's an incredible roller coaster of excitement and sometimes terror.
What do you think are the opportunities now?
Well, I think generally, if we're talking about opportunities in the technology market, there's several things I'd like to talk about. I think the first thing is that, as we all know, the cost of starting up and creating technology companies is lower than it's ever been, particularly in the sort of IT technology sectors where, you know, the cloud, the availability of development tools, the capacity to develop apps for very low cost and then take them to market in very economically effective ways is a great opportunity for people that want to start something up. And, things like social media give people or entrepreneurs the opportunity to be able to develop new technologies and in evolution and consultation with the market through the use of social media tools. And I think that's a really exciting opportunity. I think the sort of second thing, which is kind of related, is, we live in, as we say, a global market. So particularly for those of us that work in geographically very remote countries like Australia, more than ever, we now have the opportunity to be able to develop products and services locally with a view to the market globally. And so Australia, for example, can be a great sandpit for taking a technology to the rest of the world. So I think those 2 or 3 things together make it a very exciting time to be starting up companies.
What about private investments in IT or life sciences?
Look, Australia unfortunately doesn't have a great record of big end of town businesses investing in R&D and commercialisation, but we do have a very vibrant angel and incubator community, and that's really something that's really grown over the course of the last 5 or 6 years. So it's relatively recent. We now have organised angel groups. We have our first ever women's angel group in Australia, which is fantastic. Most cities have 2 or 3 groups. We have several really terrific, vibrant incubators, and that's driving some private sector investment into technology. Australians also, along with their love of property, love the share market, and we're seeing some great listed technology companies on the market that are giving people good short-term returns. And I think that's driving confidence in investing in the technology sector.
Oh, that's great. That's great. What do you think? You were talking about some of the opportunities in firms. Let's move into the challenges in firms. And you mentioned that many of these opportunities are global. So I assume that some of the challenges are global too. So just because you're in Australia doesn't mean you don't have some of the challenges that global firms have wherever they are.
Look, you're absolutely right. And I think the things that I'd talk about do apply to anybody, whichever market they might be in. But, one of the things that's really hard, I think, for entrepreneurs is standing out from the crowd because, we see it as investors, for example, or as people that are looking to partner with innovative technology firms, we see many, many opportunities, and it's very hard to stand out from that sort of massive opportunities. So I think, there's huge competition for capital, for partnerships, for talent. And being able to sort of position yourself as someone that's going to be a market leader is a really big challenge. We need entrepreneurs to have strong personal brands, but also to work very well on their professional brands. I think one of the other things that remains a problem, not just in Australia, but I think in all markets, despite the rhetoric, is that capital is still very restricted. And these 2 things go together. To be one of those 1 in 100 that's successful in raising significant capital, you've really got to be able to make your mark, both in a branding and in a marketing sense. And, particularly in markets like Australia, although I think it's probably fairly universal, we see lots of companies that get to the sort of $1 to $5 million mark and then stop growing. So they're nice little businesses, and there's nothing wrong with that. But if they've got aspirations to be global, they've got to find that capital to be able to drive that growth. And then I think one of the other things that's really important, and again related, is being able to attract management and development talent. We often say, and it's kind of a hackneyed phrase, that it's actually people that make businesses successful. And in my career, I found that to be really, really true. I often say that everything that's good and everything that's bad that's happened with companies I've been involved with has got to do with people, right? So being able to find really great talent is really difficult. And having the capability to put a good team together is an enormous strength in a leader, I think.
That's so true. I have a saying, businesses don't make decisions, people do. So
correct.
You can't separate the business from the people. You just can't. We're people before we're
correct.
Being business people, we're people. Let me ask you then, what would be the one thing what needs to know to raise capital successfully?
The one thing to raise capital successfully. You gave me a little list of questions, and this was a hard one for me to get down to one point.
To say that.
But I think being able to communicate the excitement of your investment opportunity in a soundbite. And I know that sounds like a very trivial thing to say, but in order to raise capital, you've first of all got to get someone's attention. It might be the attention of a person that will introduce you to a prospective investor, say a venture capital firm or an angel investor, or it might be getting past the gatekeeper, perhaps the PA or the investment manager in a professional firm, or it might just be getting someone's attention in the classical elevator or at a networking event. And if you can't get people excited about what you're doing in that sort of one sentence soundbite, it's very hard to get to the first meeting or even the first pitch. So I think if you can do that well, it's a great skill that will carry forward into that investment discussion. And that's what it's all about, right? Getting the next meeting. Exactly. So if you can have that great one sentence, then you'll get to that next meeting.
Well, what I'm going to do now is I'm going to unmute all in case people have some questions about fundraising. But I would like to continue the conversation into moving from fundraising to investing. How does one become an investor?
So I think let's answer that question from a very sort of generalist point of view, in the sense that I think everybody can be an investor. It doesn't matter what their net worth is or what their situation is. If you've got some discretionary capital, you can make the choice to be an investor, right? You're probably going to invest in buying a home or buying shares on the share market. And there's great structures these days that enable people to get involved in a more direct way in investing. So it might be starting to decide to allocate perhaps some of that public company investing into some more technology or risky investments. So if you're investing in the share market, or it might be joining an angel group and starting involving in some of those syndicated investments that angel groups offer before making perhaps a sort of bigger step into doing solo investing with larger sums of money. And, people can undertake those sorts of angel group investing activities with perhaps $10,000 or $15,000, which is a sort of a number that's accessible to many people.
Yeah, certainly to people who are able to afford being on a conference call with global leaders. Most people assume that making investments in startups is a matter of millions or hundreds of thousands of dollars. Sometimes we'll just require a little bit of money. But besides money, what else do you require? What else do you need to do to be an investor?
I think two things. One of them is an acknowledgement of the risk environment, because we have to be realistic. Technology startup investing is extremely risky. The statistics say that in a portfolio of between 10 and 16, there might be one or two really successful outcomes, a handful that will break even, and the rest of them will be a bust. So that's just real life, and there's all sorts of risk, technical, financial, market people. So you have to have an expectation that not every investment is going to pay off. The second thing is education, and that's one of the reasons why I advocate joining one of the organised angel groups, because I've started one here in Brisbane and been involved with others, and one of the things that they do really, really well is access educational materials more and run formal programs, but also the more experienced investors in the group are very keen generally to share their knowledge and to bring new investors along on that journey. So I think it's always better to make mistakes from a base of being educated and working with people that have been on this journey for a longer period of time than you. So be informed, get educated. I think that's tremendously important.
Probably make mistakes along with other people that can make mistakes. It's like any professional activity, probably.
Or make mistakes with small amounts of money first, and then graduate to more.
course, one of the things when they ask me, what do you need to do to be an investor? And I say, well, you need to have some money to lose. I mean, that's
yes,
starts
true.
like that.
It's
But,
true.
but there's many rewards of being an investor. Would you like to talk about some of those rewards?
Oh, look, absolutely. I think, being an investor means working with incredible people, and really your money is just a means to helping them realise their dreams. It sounds a little bit sort of in the sky, but really I think investors in many ways enable people's dreams, and you get to work with incredibly clever people with passion to build something new. But for me, my personal motivation has always been being part of the creation of a new economy for our country. We've in Australia, we've relied traditionally on what we can take from the ground, our mining and our agricultural assets and our tourism assets, and we really need to change that over the course of the next couple of decades. Being an investor enables you to be part of making that economic change by backing good things that are going to grow.
Do you think people should be investing in technology-based companies or in sort of those more stable companies that you were referring to before?
Well, I guess you've heard what I'm passionate about with that last response. So I would always like to see everybody investing at least a small amount of their available capital into technology companies. And that can be just a stock market investment. It doesn't have to be at the sort of risky end, because I think we've all got an obligation to try and drive that economic change. And we can do that by participating and investing in tech companies, which by and large have given good returns historically too.
But I want to take your word on that and expand a little bit more into this type of investments. A lot of people talk about venture capital as a way to invest in startups. Your fund is not only about investing in startups, but also about investing in companies that are growing. Do you want to expand a little bit more on that? Because I think that's a critical change in people's perception. And I think most companies nowadays are not only need capital when they start, but also when they need to grow.
Absolutely. And I think that you've hit on a really important point, and that's that not all sources of funding are right for all sorts of investments. So one thing I always encourage entrepreneurs to do is educate themselves about all the different sorts of funding that's out there and work out what's best for them. So from our point of view, we launched 6 years ago with a $40 million early stage fund, and we were investing in startups in that fund. We made 9 investments with companies that were basically, they had proof of concept or better on their products, but were generally characterised by those sort of startup attributes. Our second fund, which is investing more in the sort of Series B and beyond part of the market, was formulated in response to our view of the market. So 6 years ago in Australia, there was very little seed and Series A capital available. We've had in that interim period real growth in the angel and incubator market. So now there's much more funding available there, but much less funding available in the Series B, C part of the market, which is why we made that change. So we see a lot of companies in Australia that have started well, they've got good growth, but then they needed to go overseas to find capital, or they just kind of stalled through the lack of available capital, which is why we're now investing in later stage companies.
But, regardless about going overseas to seek for capital, Australia is a small country with a small population. So if a company needs to grow, chances are that they do need to look outside of Australia, right? So probably going out is not only going out to look for funding, but also going out to look for collaboration or to look for partnerships. How do you see that? How do you see that collaboration attitude? Do you see there's any change on that, or do you think people are trying to grow their companies solo more?
No, I think you're spot on. I think most of the companies that leave our shores leave for growth opportunities, and capital is just one of those elements. So let's be honest, for most companies to get a significant scale, they're going to need to move beyond the shores of a $25 million population country like Australia. So most of them will end up in Asia or in the US, where the markets are effectively for them. And I think Australians are getting increasingly better at being able to form those sort of networks and collaborative relationships that are important for growth. And luckily, we're supported by some great government and private programs that help companies and individual entrepreneurs to build networks in those countries. So by way of example, you mentioned in your introduction that I'm a director of Springboard Enterprises. So Springboard Enterprises Australia is a franchise of the US Springboard program. And really the women entrepreneurs we put through that program now have access to a tremendous network of US entrepreneurs, companies, corporations and individuals through the Springboard program.
That's fantastic. That's fantastic. I have one last question and from me, and then I'm going to open it up to the audience. And I have a list of questions that people sent us during the last week. My last question for you, it's kind of a tricky question because it's very precise. If you had one piece of advice that you wish you had when you started your professional career, just one, which one would that be?
I think, and this is perhaps something that comes with maturity, I think the one piece of advice I'd like to have had is don't sweat the small stuff. Because I look back, I look back at the sleepless nights and the hours of energy that were expended on things that in the end weren't tremendously important. And I wish I'd had the maturity to be able to understand where to invest both my emotional and intellectual capital. And I think I would have been more successful if I'd been able to corral those things into the things that were truly important.
Great. And this is a question that I'm sure you're asked all the time. Does gender matters?
Does gender matter? Is that the question?
Yeah.
Gee, that's a broad subject. Unfortunately, the statistics tell us that gender matters. I mean, something like only 3% of US venture capital goes into women-led businesses. We see very few women angel investors. And unfortunately, while more businesses are started by women than men, very few of them get to the sort of scale that's going to drive significant returns for their shareholders and for the founders. So I think in output terms, it appears that gender matters. But I think we're changing that gradually. And I certainly don't think there's that gender has any impact on capability or ability. It's just a process of evolving towards equality, if I can put it so simplistically. I mean, in our firm, we have 2 out of 3 of our founding partners are women. Of our 9 investments, 3 out of the 9 were founded by women entrepreneurs. We have female investors. This is really rather unusual, but I think it's a sign of the progress that we're making in terms of gender equality in both the entrepreneurial and the investor space.
Do you think it had made a difference in you personally?
I think it's got swings and roundabouts. I mean, one of the swings is that if you're the only woman in a room that's mostly men, people will remember that you were there. And that's not necessarily a bad thing. I think we bring a different perspective on a whole lot of things related to investing, how we manage people, how we manage our boards, how we manage difficult situations. And certainly that has been beneficial. But I mean, I guess in the end, I'm a bit gender blind, and I think people are people, and I like diversity. I like diversity of gender and race and age and just perspectives. I think that's what's really important.
think there's a difference in with regards to education that might have an impact. In the case of not gender only, but races, or you have an Aboriginal community that I don't know, it doesn't seem to be well represented in the technology sector.
I think having a science, technology, or engineering or mathematics education is such an important thing if you want to work in this sector. Although it's not the only kind of educational background that works. I really encourage people to get involved in one of the technology sort of sector education areas, because I think it gives you a way of thinking out approaching investing and managing technology-based companies that's different. I always think that when I look back on my science education, one of the subjects I hated the most was scientific method, and yet that whole kind of rigor around hypothesis, experiment, results, analysis is really what we do every day when we're working in the technology sectors. So I think it gives you that perspective, that way of thinking that's incredibly beneficial when you're working in this part of the market. But equally, I think a business education is really important, whether it's a formal business education or working in commercial companies and understanding the rigours that are involved there. I think bringing those two things together can be a really good sort of starting ground for working in our sector.
You think it is possible for anybody in any part of the world to create a global company?
I think given the right resources it is, and the right resources, I suppose, start with having start with some inputs. The inputs are, knowing what the problem is in the market and having a great solution to that problem. But then the enablers are access to talent, access to capital, access to all those various building blocks that go together to being able to create a truly global company. From a communications point of view, there's no barriers, right? But it still comes down to having those inputs. And unfortunately, in some parts of the world, finding good talent, finding capital to grow is much more difficult than in others.
Yeah, or finding clients too.
Correct.
Yeah. I have another question here. Do you think age and experience has anything to do with success in raising capital?
It's actually a really great question, because I think it kind of goes both ways. I mean, certainly as an investor, when a successful serial entrepreneur comes before us, we look at them much more closely. They're proven. We know that we're going. The chances of success are higher because they've been through this whole process a number of times and come out the other end with good results. But younger, perhaps less experienced entrepreneurs have equally desirable characteristics. I mean, one of them is they're fearless. They tend to be unencumbered. So, without mortgages, perhaps children, ties, geographical ties, that makes them extremely mobile, extremely hardworking and extremely creative. So in our portfolio at the moment, we have entrepreneurs that range in age from 24 upwards. And our youngest entrepreneur is a tremendous person to work with. She is very responsive to mentoring and coaching. She's hugely energetic, mobile, creative, and very capital efficient, which is tremendous. When you're investing, you want your entrepreneurs to turn every dollar into another couple of dollars, and this person is very much of that vein. Takes her responsibility to investors very seriously.
Yeah. I have another question here. Does each VC group have its own particular preference? You've mentioned tech a lot. Mm-hmm. Also, if you have a dream and no capital, how do we find the best VC groups for our dream?
So answering the first part of that question, most of the time with VCs, so just to explain a little bit about how a VC fund works, on one side we have our investor pool. In the case of OneVentures, we don't have an institutional investor. We have capital from a range of high net worth investors and family offices. And typically what we will do is we'll go to market with an investment thesis that says, this is the kind of things we want to invest in. This is the stage of investment. This is the geographic market. If you're interested, would you like to back the fund? So that will set our investment criteria for the sorts of opportunities that we'll be interested in. So in OneVentures case, for Fund 1, it was early stage Australian-based technology companies. In Fund 2, it's later stage Australian-based technology companies. So we are a technology investor. And all funds will have their own investment thesis that's pretty well, maybe a little bit of play around the edges, but it's pretty well set because that's our promise to our investors, right? So I think, if you have a dream but no capital, what you need to do is to look out at all those sort of sources of capital and find out whose investment criteria your dream best fits to. And those are the sorts of firms to approach. So one of the things entrepreneurs mustn't do is kind of just spray their PowerPoint presentation around to all investors. Make sure that they're a good fit for the investment criteria of those particular funds, and then you have much greater chance of success.
Thank you. I have another question here. Do you need a consultant to have access to a VC?
No, well, not in my experience. I think the most important thing I think to understand is that we get a lot of investment opportunities. So to enable yourself to stand out from the crowd, a great way to approach a VC is to get a qualified introduction. So find someone that knows one of the partners in the fund that can introduce you into the fund. And consultants can be one way of doing that, but unless they've got that personal relationship with the fund, it can be off-putting rather than a positive experience. So find a good, positive, warm introduction. If that's through a consultant or an investor or just someone in that partner's network, that's a great way to open a conversation.
That's a great advice. We do see a lot of people that come with consultants that offer them that they are able to raise money and they want to drive the process, which is a turnoff for us. We want the entrepreneur to drive the process, but as you say, a consultant that can make a warm introduction is very useful, and I hope that is very clear for the audience here.
Yeah, and I think I've had good and bad experiences with consultants. So I'm not bagging the cohort, but some can be excellent, some can be not so great. And I think if you're to engage a consultant, one of the important things to do is get references, and references would include other entrepreneurs they've worked with, but also other sources of funding where they've been successful in raising capital.
Great. We have an interesting one here. Do you have a horror story?
Well, we're VC investors and it's a portfolio, so there's always good days and bad days. Do I have a horror story? I suppose one of the ones that comes to mind, it was actually prior to OneVentures. It's not so much a horror story, it's just illustrative of the roller coaster that is investment. And I had been working with one of my companies at the Incubator for many years, and the company, which is the energy storage company that you introduced early on, went to a public listing, and I was honoured that the entrepreneurs asked me to sit on their board through the listing process, which was a fantastic learning experience for me, but also a great process to observe. And we listed close to $1. And unfortunately, because we missed some of our marks, the share price dropped all the way down to 7 cents over time,
oh my goodness,
which is a terrible situation to be in. Now, I should add that the share price has now recovered significantly, and I think many of those shareholders are fairly happy with where the company is now. But it's pretty soul-destroying to be on the downward roller coaster in that sort of a situation. Great to see the company coming up, and I think they're going to be really successful, which is great to see. But this is another chapter in their book of growth.
And we have one last question here from the chat room. Do you have a favorite type of entrepreneur? Do you have a type of entrepreneur that you really, really enjoy working with?
I really enjoy working with entrepreneurs where it's a very collaborative process. I mean, we use this phrase in the US community called coachable, which really means that, one of the things as a VC that we bring to the table is not just our capital, but our networks and our expertise. And that's a team effort on our side. So what we really want is entrepreneurs that are open to taking that advice, utilising our networks to grow their business, to ensure that all shareholders have success at the end of the day. So, I don't mind entrepreneurs that are challenging, any other attributes, but one of the things that's really important is that we can work together, because it's like a marriage, right? I mean, we're going to be together for 5-7 years. And we want to know that we can work well together and add value.
That's great. That's great. Well, we are we're getting very close to the end of this session. We wanted to have 30 minutes of conversation and 15 minutes of Q&A. I'm just gonna, okay. Here's one. Okay, this is another one. This is a cute one. Will I sound, excuse me, I'm just gonna read the question. Will I sound too green if I ask, what are the terms of a typical deal? There's no real questions. So what are the terms of a typical deal? I assume that these are a typical deal for OneVentures, the fund that you manage.
Look, I don't think there's any such thing as a green question. So no, you won't sound too green. Look, it depends very much on the fund. But typically these days, venture capital deals in the earlier part of the market, even though I said we're investing later stage in our fund too, it's still relatively early. Typically, what we'll be looking for is preference shares. So that means that in the event of an exit, our money will come out first, and that's what we call in the game downside protection. Typically in the sort of 1 to 1.5 times preference return sort of area. We'll be looking for a seat on the board, sometimes 2 seats on the board, because having input into governance is tremendously important. We'll be looking for certain controls over kind of obvious things like the direction of the company, whether or not the company takes on debt, hiring of key senior executives, etc. And then there's a whole lot of kind of technical things like drag along rights and tag along rights that would take me a whole 45 minutes to go into, that are fairly standard VC terms. And I think that's probably as much as I've got time to cover in this few seconds. Well, I think one of the things that we agreed at the outset was that this session wasn't particularly about women, but I have to finish off with a comment that is about perhaps not so much gender, but about our responsibility to each other. And it's a great quote, and I'm sure many of you have heard it from Madeleine Albright. And it says that there's a special place in hell for women who don't help other women. So I just leave everybody with the challenge to go out and help another woman, entrepreneur, investor, colleague, whatever, in the next week or so. I think it's very important that we stick together as a community and help each other out.
Well, I couldn't have said it in a better way. Thank you so, so much. Thank you, everybody, and until next time.
Thanks, Alicia.